everyone, welcome back to Investment Physics. Disclaimer, I'm not a certified financial advisor. It brings me great joy to make this video. So, I had a quiz that is still live in my channel, basically asking what kind of content you guys prefer. Level 1, the basics of investing. Level 2, how to analyze the fundamentals of a stock. Or level 3, how to trade options and some more advanced topics. So there is one person who voted that he or she wants to see more level 3 videos about options. And for that one person, I'm doing this whole series on trading options. What are the methods that I use, what have worked for me in the past, what has not worked. Hopefully, it helps a lot of you. If any of you have any other feedback, both positive and negative, please post in the comments below on any of my videos. If you would also like to see some specific content, please check that quiz and please vote. Even if it is just one vote, I promise that I will make content for you. Okay, let's get started with options. Disclaimer, like I said, I'm not a certified financial advisor. Disclaimer two. So there is this popular line by Warren Buffett saying that options are weapons of mass destruction. This is true because options is a place where you can lose almost all of your capital in a very short period of time. In stocks, you can lose only if the company goes bankrupt, or else you can still hold and continue waiting, hoping that the stock price goes up. But in case of options, depending on how you placed your bet, even for a very healthy company, if you place the bet in a wrong direction, then you could end up losing 100% of your capital. So this is why options are weapons of mass destruction, and one should be very prudent before venturing into this field. Disclaimer 3, like I already said, options can lead to 100% loss of capital. In addition to that, it can also lead to loss of appetite, loss of sleep, loss of general well-being in your life. This is especially true if you are a person who is more attached with money, and if you are a person who gets very worried even if your stocks fall like 5% or 10%, then options is definitely not a place for you. I would suggest you just stop watching this video right now and you go continue investing in stocks or whatever other methods give you peace of mind, because nothing is really worth losing your sleep. There is no point if you're losing your sleep in options. I know a friend of a friend who wakes up every day at 5 a.m. or 6 a.m. and monitors the market just to be able to trade options. And then his wife was complaining that he is not able to get quality sleep, and then he's having a lot of mood swings, anger issues. And she was asking him to stop because it is not worth, this money is not worth if this is what the price you have to pay. That is absolutely true. If you yourself find that you are going through such things, I would suggest you at least temporarily stop trading options, and then you either revisit your strategies, try to pick strategies that are not that risky, that allow you to balance a very healthy work-life balance as well as a trading life. And number 3, I suggest that you find your own methods to cope with all of this stress and tension. For me personally, meditation works the best. I still try to meditate every single day. It clears my mind and it helps me think both on the job as well as in the trading and the investing world. If this is something that you have not tried yet, please consider meditation. And then once you feel that you are able to get a good grip on your sleep, and then even if you see like a minus 50% today, if you're sure that you can sleep that night without worry, then you are ready to trade options. Another disclaimer, I have discussed some of my methods with some professional risk managers in banks and hedge funds. They have compared my methods to kind of gambling. I cannot say they are wrong entirely, mostly because they use options in a professional setting when they are managing millions of dollars of assets. We are retail investors and we are kind of trying to make a quick buck on the side. So options are a very risky game for any retail investor, mostly because we do not have the expertise that these professional hedge funds have. So be aware of the risk before you venture into this field, is what I would say. The professional risk managers that I spoke to, they use complex equations and partial differential equations and things like that to make bets. I don't use any of them, mostly because I don't have the expertise to do that. What I use are very common sense methods and very basic risk management strategies, but these methods have definitely helped me generate profits in the past. In 2020 or 2021, I've been able to get like 100% profit using small, consistent bets throughout the period of the year. I think this year I probably would have got 20 or 30%, mostly because I placed just 3 or 4 bets in the whole year. Already 6 months have passed. So 20-30% in 6 months and a very small amount of money. But all I'm trying to say is there are ways to make money using common sense approach. And the way I do options is I don't go all in. So 80% of my portfolio is always in stocks. Only the rest 20% I trade in options. I would recommend you to do the same, or at least keep a large amount of portfolio in secure assets like bonds or CDs or stocks or something like that, so that you don't go all in and blow all your money, and then you will have terrible remorse that you wasted your money, where you could have at least bought other useful, safe investments instead of playing options. Um, Another disclaimer, I know this video has a lot of disclaimers. So 95% of option traders, retail investors, they lose money. But now of late, more and more retail investors have been entering the options world. But still 95% of them lose money. So, be aware of the risk before you start. If you're still watching this video, then I'm taking it that you're pretty determined, and whatever the risks are, you want to try your hand. Okay, then good luck to you. Let's see what can be taught and what can be learned. So options is a place, it's kind of a happy-go-lucky place the way I see it. So stocks is a place where you just analyze the fundamentals or some trade idea, or let's say the entire market is going in one direction and some sector is undervalued. Then you buy stocks and then you just wait. You can wait for 5 years, 10 years, 20 years. You can wait indefinitely basically when you buy stocks. But options is a place where you have wild swings. I personally have seen plus 100%, minus 50%, minus 80%, and again plus 50%, all in a period of a few months, like within 1 month or something like that. So this is kind of the volatility you can expect in the options world. So if you are trading options and let's say you see like a plus 50% profit today, it would not be a bad idea to book your profit, because tomorrow there is always a chance that it becomes minus 80% or minus 100%. In that case, you would have at least felt better if you had booked profits early on. I know if it becomes like a plus 100% and you booked your profit at plus 50%, you will feel bad, but that is much worse than you not booking profit and it going to minus 80%. Trust me, I've been there. So I think it's kind of a happy-go-lucky place, and whatever you get, you just take it and you'll be happy with it in the options world. The second thing is you have to be having a very prudent risk management. I already told you that I keep at least 80% of my portfolio in stocks and only the 20% I do options. That is the max I go. Usually I do like 5 or 10%. And no matter how good of a trade you see, do not violate these rules that you build for yourself, because no matter whatever fundamental or whatever charting or whatever analysis you do, there is always a chance that your bet goes wrong, and in options world that means it's 100% loss of your capital. So you have to have very strict rules, and you also have to have the willpower to not violate those rules irrespective of what is happening with the price of your portfolio. So this is the second thing. The kind of risk management I do are very common sense and basic, like I said. So I usually like kind of assess what is the chance that a particular trade may become correct or incorrect, and what is the maximum profit percent. So let's say that there is a trade that I'm about to take, the 20% maximum profit. If it is a 20% maximum profit and 100% maximum loss, then if I get one trade incorrect, then I need five trades correct to make up this 100% loss. So you have to divide your money in such a way that there is enough money for you to continue investing into options. So in the example I gave before, if your profit percent is 20%, and if the loss is 100%, then I have to divide my money into six equal parts, and each bet I can place only on one part of that division. So even if one trade goes wrong, I can still have five trades to make up this one trade, and there is the sixth part of the money left over to give me a net positive return. So this is the basic kind of risk assessment I do, and I of course try my best to not violate these rules. If one particular trade is going bad, you can at most take one extra division of your money to invest more. So let's say you bought something and it became minus 50% or minus 80%. Then you can invest one more part of your original money kept aside for options, so that you're basically trying to buy at a loss. Hoping that if it goes up, you're trying to do some kind of averaging. But I would recommend not to go more than three parts in, because then you are basically heavily hedged on this single trade. And if the single trade goes wrong, then you are going to lose three portions of your money, and you have only three portions left to make up, and it's going to be very hard. You need to go into 50% and 60% profit bets to be able to regenerate your money lost in that case. So this is the kind of basic risk assessment I do. And the second thing is to have very strong bookkeeping. So every single trade I do, especially in options, I use Google Sheets to maintain a tab, and every single day I need to know whether I'm at a profit, if I'm at a loss. Also, I need to know which particular trade gave how much of a loss, why it happened, and if there was something for me to improve on it. This kind of bookkeeping is very useful in options, because you can assess yourself in real time, and if over a period of 3 months, if you are not able to generate profits, then I would suggest you completely stop options. You reevaluate your strategy. And if it is still not working out for you, then I would say please stick to stocks, because even in stocks, you can make very big money by just picking undervalued sectors, undervalued stocks, and then buying a lot of them and then just waiting indefinitely. It is definitely much easier than trading options. That's exactly what I would suggest. After your bookkeeping, if you find that you're not able to make profit, then there is no shame in quitting. A lot of people find shame in quitting and giving up, thinking that they have lost this or they're not smart enough or something like that. But options is not a place where you prove your smartness. It's not really a job interview. The kind of bets I do, they are not smart at all. They are the most boring, the most easiest methods is what I do in options world, because I am not looking to make 100 or 300% profit in 1 month. I just want 20% profit in 1 month, and that itself is a very big deal, because if you are able to make that 20% consistently for a period of 1 year, that is to 40%. That is phenomenal return. So this is exactly what I would advise you to set your mindset as. Not to look for very oversized returns, look for small, consistent bets. It could even be 3% or 5% bets. Just look for these things. But if you can consistently do this over a period of 1 year, you can easily even double your money if it all works right. So, you don't have to be extremely smart to do this. You just have to study a few things about options and some strategies. And over experience, you will, of course, have your own strategies. The next thing I want to say is I mostly trade only on stock options. So you can buy options directly on stock companies like Amazon or Tesla or Nvidia or something like that. You can also buy it on the index like S&P 500 or Nasdaq 100. In my past experience, I have not had much luck trading directly on the index. It could be that I have not found the right methods or something like that. I do see some YouTube videos from other channels who do things like 0 day expiry, and they trade directly on VIX or SKEW, or they trade directly on S&P 500. They basically do some kind of trade in the first 1 hour when the market opens, and they kind of do something when the market closes as well. I have not had much luck with this, and so I have completely given up on them. If you want to try, sure, go ahead, try them. But like I said, have very prudent bookkeeping so that you are able to assess your own performance in real time every day, every week, every month, every quarter. And you can compare on doing stock options and index options, and you can assess for yourself what works best for you. And if you think index options are working best, then sure, go for it. Unfortunately will not be talking much about how to trade the index options because I myself have not had much luck on it. But stock options are what have made me good money in the past, and this is what I would like to talk about. Like I've already said, so when you start reading about options and basic calls and puts, you will read that buying naked call means unlimited profit percent, like infinite. So if you're new to this game, you would think, okay, this is all I need to do. I just buy naked call, nothing else matters in the world, and then I just wait for my infinite profit to come. But I wish the game was so easy. I would say that whatever methods give you, or at least in the risk reward ratio, they promise like this infinite reward. It usually also means that the probability is very low. So in options, you have to know your risk reward ratio, the probability of your trade coming true, and whether it will happen in the time you predict. So in stocks, you can buy something and you can wait for 10 years, 20 years, nothing is going to happen. But in options, your prediction has to come right within a given time. Even if your prediction comes right 1 day after that intended time period, you will end up losing 100% of your capital. So what I kind of do is I pick very boring methods, things that are already out there. Like I said, things that gives like 5%, 10% or max 20% returns in 3 weeks or 1 month. I just do those, and over a period of time, my profits accumulate. I usually never buy naked put or naked call unless I really am very convinced of something that is happening to that stock or company that justifies me buying a naked put or a naked call. Most of the time, I trade only spreads. I do not do any fancy trades. I don't do iron condors or butterflies or anything like that. I just do put spreads, call spreads most of the time. So this itself is enough to give me 10% or 20% return in 1 month. So why would I waste my time doing very complex things? The way I do options is usually I don't wake up every day exactly at 5 a.m. or 6 a.m. when the market bell rings. I don't monitor very closely. Like I said, my bets are very boring and I may not even monitor every day. My holding periods usually vary from 1 week to 3 week, and my bets are in such a way that even if the price does not change at all, I end up making money. So like I said, they are very boring bets. There is nothing much for you to do. There's no adrenaline rush, there's no excitement, but I like making money the boring and the easy way. So if this is the kind of thing that works for you too, then probably continue watching my videos. Also, I like these kind of boring bets because I'm able to manage my day job and this trading simultaneously. The people who do index trading, they have to wake up exactly on time at 6 a.m. when the bell rings, and they have to spend 1 hour monitoring the price action and the volume order flow and all of these things. It may not be possible for people with day job to do these type of things. So if you are in that category, then probably stick to stock options and the kind of boring bets that I will go to in the later videos. So hopefully I have warned you all enough about the pitfalls of options, but hopefully I've also given you some inspiration on the possibilities of options, because options is a very magical world indeed. It is a very fascinating thing to me, because it is a place where you can lose a lot of money and make a lot of money in a very short period of time as well. If you are watching this far, I'm going to take it that you are interested in options. Stay tuned as I go into some methods in detail in my future videos. Thank you. If you like my content, please like, share, and subscribe, because that is what will motivate me to make more quality content. See you all soon.